All right, guys, here we are, 1338 on the AMC. Yeah, come over here. You got days starting off at 12 and some change, busting up there. Got a little sell-off in carrying. We hit a high of 1396 today. Sorry for my terrible Australian accent. Anyway, so here we are. We got these little 2 shares picked up. Got some options still in play. Yo, for anybody who wants to ride this AMC wave that's eventually going to come, there is no time limit scale we can put on it because we don't know when exactly it's going to happen, right? So with that being said, you got to play your cards right. I cashed out $500 out of this account to do some things, and with that being said, I left one of the January 40 calls because that gives me the best probability to sit and wait for an immaculate move. Even if it just goes to $20, that $40 call will make a hell of profit, right? So then I also have the 28 spreads, and then I have the 40 sales there also on spreads. So let me go back here to the main page. You can see this Amazon is obviously garbage because 32.50, 49. I opened that a long time ago, before earnings. Anyway, so you have these 2 here. So the cool thing is if you build this spread, right? So it's June 25 to June 18, and it's 28 to 40. So the reason being, this is a calendar spread, right? This is a diagonal calendar spread, because horizontal would be a standard calendar. It'd be flat. It would be same strike. So it'd be buying a 28, selling a 28. So what I did was bought a 28 and then sold a 40. That gives me the optimum profit in between the two if a move incurs, right? If we get to 40, the contract will expire at $2,200 approximately, and that would be the best possible scenario for these baby spreads. Let me build this for you real quick while it's on record, and you'll see exactly what I'm talking about. So let's go to trade options, view all options. Okay, got it. You can trade same expiration on Robinhood. These do count as day trades. Don't mess that up. So scroll over here, right? I'm showing you how to build these spreads. You must be approved for level 3 advanced tier options on Robinhood to do so. You don't have to have margin, but you do have to have Robinhood Instant, which basically acts as a type of margin because it allows you to use the cash you have beforehand, right? So therefore, instant deposit, and if you do credit spreads or calendar spreads or debit spreads, etc., they all allow you to have that cash in hand to substrate the other bought or long call or put. So June 25, up here at the top, make sure you select buy. You're on call, right? Not on put. Okay, so you go to put, it changes everything, go back to call. Now you got the right stuff. So scroll up. You see these contracts all gain 30%. Even this morning, I called out one in the chat, honorable trading. So let's go ahead and buy. And now we're going to move to sell before we switch expiration. So you see, I got 4. Now we'll go over here to June 18, all the way to the 40s. 4. All right, boom. Now look at your max profit. Okay, at this moment, your max profit is $1,224. All right, that's $1,224. Now I have 4 of these, so let's go ahead and continue. We'll put the quantity of 4, and now we have a max profit of $4,898. And that is if AMC expires on June 25th at $40, right? That gives us the optimum goal here. Now, what I like to explain to people, and what's in my book as well on Amazon, the idea of a calendar spread is for the sold strike to expire worthless. Therefore, you collect the entire premium, okay? If you collect all the 40 premium, right? So say 40 expires worthless, it expires at $39.50 or something, right? So now pretend these are gone, okay? So now we scroll back over here, and we still have these long 28s for the very next week of expiration. So now your profit is unlimited, okay? Now, and you can see how drastically that goes. So if it expires at, $40, which is what you can see here, barely, it's $759, so it's at 36, so add another couple $100. So basically $1,200 per contract at that point is what it's saying that you would get at that price. However, if it bursts through 40 and goes to some other obscene number, right, during you holding these $28 calls still, guess what? You're going to be able to capitalize on all of that profit on top of the other, okay? So you've received the credit from the sold calls. It expired out of the money on those. You received the 100% credit, and now you have the 28 long, all right? AMC's a long ride. So if you're going to be an options trader who's trading price action in between, hold one of these long contracts and just let it ride, okay? Thanks for watching.